Welcome to TradeTheMBI.com. This is Jonas Reporters for the 6th, and we got some excitement the other day. We saw Apple suffering sales decline in China, which is a big deal. You also saw manufacturing actually plummet, and that's a significant development. And inflation continuing its move, putting the Fed in an impossible situation because how are they going to ease under an election year? They have to for space of that. Trump has secured pretty much the nomination against Biden now, and you've got serious turmoils developing, as well as an economy that is showing signs of struggling under the current rates. So, do you have a stagflation situation developing? Absolutely. And this is something where, we know that we've got these various positive extreme levels to keep an eye on and pretty significantly lower from where we're at. Now, of course, all we did was move in between the ABM yellow, and we're pushing up against the top side of it right now. Um, Still not a whole lot of short increase. This has just been a bull situation where if they fail to buy, there's just not a whole lot of room for people to get out quickly or anything, and so they just clear stops and rinse and repeat. NQ, you can clearly see, has been the leader and therefore leading its way to the downside, and it's supported off its 76% line. And again, still within weakness, so that's clearly DOC spread and all that, and no question about that. We all saw it develop intraday. It was pretty clean. Uh, Will it continue from this standpoint? Well, it's going to be tough for them to hold the support if we fail back down towards that. So, from a Nasdaq standpoint, at least, you got the 76% from the S&P. We have the ABM yellow above is long, and below it is definitely a short. Treasuries, money flocked back into it, so the yield dropped again, counter to what the current situation is. So, people running to safety, the VIX jumping. There are a lot of headaches for a lot of people, and this is going to shake out a lot of weak hands, but of course you get new money fund money coming in, and of course it went to treasuries instead of stocks, and that's a big difference. Oil not moving is an indication that potentially your demand for oil is reducing. So that will be definitely the one that's going to be watched next. You can also see that pretty much sanctions from Russia's standpoint on oil aren't working because now they're trading their oil pretty much at parity for what the actual cost is. That's also, showing the complete ineffectiveness of, the war effort, which is not going well for the Ukrainian side. And you can see the only reason manufacturing wasn't in a complete disaster was the fact that they're spending an absolute fortune buying arms from, arms manufacturers to keep them afloat, which helped mitigate the absolute disaster from a manufacturing standpoint. Euro climbing for no good reason other than the interest rates for the U.S. dropping a little bit, but the eurozone is in no better condition whatsoever. So that's always fun to watch. And the explosion of gold's just begun. I mean, we talked about this; it was artificially held down, and now it's made its move. But as we were talking about, outpacing all of it, Bitcoin breaking into new highs, and then they cleared the stops. How beautiful was that? They just took out all the weak hands, but it was an opportunity for those that were trapped from years back at the peaks. They were able to sell it and get out of it at that particular stage, and of course, bouncing right back to the peak of it because, again, limited supply. And when you have that thinner situation, all the money traveling into ETFs for the excitement, still pretty strong. Of course, pretty weak from a short-term buyer standpoint. Cyan potentially going to reach. We'll be watching that one because that'll be a critical stanchion there. And again, if steel moves back above negative 13.5, which at this particular level is definitely going to do that, would certainly spark another move. Even beyond these highs. ETH outperforming, so it came back down, much bigger sell-off, but rebounding even stronger. So it's outperforming from a relative standpoint to Bitcoin. And from an intraday standpoint, the 50K, we could see it clean, DOC spread, Magenta dropping below. Still wasn't a huge amount of strong short interest, but once white got above, that was clear. The short move, beautiful all the way down there. And then from the bottom with the turnaround, capturing this upside tick on it. So all clean, increased volatility, filling back in. not major on the positive extremes from a daily standpoint. There's a lot of room there, so that's something to bear in mind, and people would freak out if we actually started to fill those. Intraday, you can see here from a 5-minute chart how started in the pre-market. There was a brief push up right before the open, but with those negative headlines from Apple and the others, Tesla and that showing weakness throughout, uh, there's a lot of potential glitches, so to speak. And what is the Fed going to do in this situation if inflation is going to keep rising? Are they going to be able to cut within that? And then what are you going to have? You've got deficits through the roof. You're bringing in as many people as you can, but that's the only way to support declining Western societies. They don't have enough population, and they know that from an economic standpoint, you have to bring in more people. For Europe, it's working with the Ukraine war as you're displacing all of these uh, people, moving them into Western societies to help bolster the fact that none of them have a birth rate that can sustain themselves. Africa is the only continent really producing, and some in Central America and South America that have positive birth rates. So you're bringing those massive moves. You saw the headlines. The Biden administration had brought in almost 380,000 immigrants from various parts of the world and flew them in. Documents revealed that one. So there's a lot of other plays. As much as everyone's talked about immigration and things like that, at the end of the day, the U.S. would be in a world of hurt if they weren't bringing them in. And they know from an economic standpoint that's the only way to keep that engine moving. You can see here from a 5-minute at the current post, their turnaround coming back after the dip. You clear stops, push it right back up, and now we're making another run back up. So, uh, is it traumatic? Well, there's a lot of things on the plate right now, but overall, with inflation, you're still going to have the market taking that into account from a valuation standpoint, despite earnings and that. And so you get an automatic inflation to the value of things just from that devaluation situation. And it's always been a difficult one for people to comprehend that because they're just looking at what relative earnings are, but market has a broader view of those kinds of things. So it's going to be one of those ugly pushes. Of course, this is the prime moment for stocks with all the new money that has flowed in. So whether it stays in stocks or starts to move to treasuries, I don't see how it can with inflation what it is. It's an impossible situation at this particular stage. So people are just going to have to deal with the added volatility and the back and forth moves, and that's just going to be part of what we can expect. I think probably through most of the year, and in some cases, the downdrafts could be quite significant. So definitely helps to have the indicators that can show the way, and I think that we're fine with that. So that's the long and the short of it. A lot of activity, a lot of interesting things happening. Stay with it all. As always, though, trade well. Have a good one.